Hi all, it's Catherine Burgess with Burgess Group Compass. We're doing a quick overview of the major headlines and then we'll get right into it. So last week in Boulder County, we had incredibly short inventory. Then nationally, it's just been published that we had over 19% appreciation in the past year, and that we are looking at a cool down that will spread out through 2022 and into 2023. So getting into the details, I'm not going to go into the numbers, you guys can look at all the charts in our blog, but essentially low inventory, which translates to low under contracts. So a quieter amount of activity this year than we have seen in the last few years. At the same time, we have more buyers, or a robust number of buyers, maybe not more, that are driving those prices up. So in all the price bands, we're seeing good activity. In this last week, we had a little bit more quiet in some of the higher range price bands. So feel free to take a look at the chart on that as well. But in general, everything is moving. We don't have a part of the market that is no longer rolling forward. Then nationally, CoreLogic, which is an organization that does really big data analysis, has published their home price index, which is an awesome resource. And so they've documented that over 19% year-over-year appreciation has happened nationally, and they are projecting that we will have another 10% appreciation through July of 2022. And then by the time we get into 2023, we'll be looking at more like 3% yearly appreciation, or 3.8. So we'll have to wait and see how that actually shakes out. They've not been exactly on point with their projections in the past few years, but in general, it's not a bad, suggested roadmap of where we might go. Then do keep in mind that interest rates are projected to be going up. There's been a little bit more unknown with that because of what's happening in the Ukraine and the ripple effects there with the bond market. In this past week, we had interest rates dip a little bit because of what was happening in the Ukraine. And so it's hard to know how those two things, what the Fed does and what's happening geopolitically on a global level, will interface, but that's the Fed's job. They will be trying to make it so that we have a stable market and our economy functions the way that we all want it to. The long and the short of it is that sellers, right now is an incredible time to come to market. So even the next couple months, we have a pretty good feel for what that will be looking like. As we get further into the future, the number of buyers is hazy to know. That will really depend on what happens with interest rates. So great time now. Buyers, it does look like there may be some respite in the future from a quantity perspective. The buyer quantity will likely go down as interest rates go up, but you have the trade-off of interest rates going up. So that may be more interesting to cash buyers than to regular buyers, though from a historic perspective, those interest rates will likely still be incredibly low. So call us with questions. We're happy to be a resource. And as always, please like, subscribe, and share, and we'll see you again in 2 weeks. Thanks.